On today's hot sheet, I will be discussing the increase in mortgage applications. And on top of that, the decline in home builder sentiment. Who would have thought that? And we are taking your live call. So don't forget, today we're going to show the number here in a second. You can call in, you can chat with me, have lots of fun. Today is Friday, November 17th. I am Jeremy Knight, and the hot sheet starts now. Welcome back. I already see you doing exactly what I'm about to ask and saying where you are from in the chat. Lenny from Hermosa Beach, what up? Megan, hello. Good morning from Scottsdale. Move to the mother lode with Brad. Good to see you from Anaheim. Oh, let's go. Jeremy Jameson Blackwell. Good to see you, my Tennessee friend. Hey, we've been chatting a while, man. Good to see you. All right. So before we get started, I'm going to read the show notes here. We're going to get to that in a second. I want you to do one thing for me. Just one thing. Number one, actually two things. Number one, know that the phone number will be up here in a second. I want you to call in. Let's chat. Two, in the chat, do me a huge favor. After you tell me where you're coming in from, let's give a big thank you to Byron, number one, for letting me host today again and letting me come back. But I think people don't understand, what we do as agents and how much time goes into being an agent. Same thing goes for the time that the BAM crew go into putting in the hot sheet every day. Bobby on the back end, Sarah on the back end, Byron. I want to thank them all. So I want you to write in the comments, either thank you, BAM, or thank you, Bobby, because a lot of the information that's on here, I R&D am used to my clients. So I want you to be able to do the same thing. We got Jacksonville in the house, Tampa Bay in the house, Montana in the house. Don't forget, we are going to do live call-ins today. You can ask me any question you want. I am 6 foot, if that's what you're calling, not 5'11". Portland, we got a lot of good stuff coming in. Welcome to the Hot Sheet, the industry's only live daily news show on the internet, brought to you exclusively by BAM, or as we know it, BAM. The Hot Sheet covers what you need to know about the news real estate industry on a daily basis for every 24 hours. For access to the charts and slides we will be reviewing today, which you will get. In fact, I R&D'd these slides myself this week on my market update video that's coming out next week. If you're not following my YouTube channel, do that. But sign up for BAM. Use the promo code, my name, Jeremy, Jeremy. This is where you'll get access to all the Hot Sheet daily downloads, courses, bi-weekly masterminds in the BAMX community. Use my code to get 10% off, Jeremy, for prescription. I said that last week too. I realized that when I watched it back. Subscription at the link and description. You can use the code TRE as well, TRE. It's shorter. That's what he said yesterday. So prices for BAM are going up December 1st. They're going to be $12,000 a month. So it's going to be super expensive. You might as well use my code and save a bunch of money. I'm lying. It's not going to be 12 grand a month, but sign up now so you can be fathered into today's prices. We are going to talk about mortgage applications increasing in builder demand. Trisha, what's up? Good to see you. Agent for the people. Thanks, Byron. Awesome. Glad for you to put that. Good morning. Good morning from Marin County, California. Marin County. Sorry, I know that. Prescription is good too. Yes, it is the prescription for getting through these few hard months. Like I said, last time on the show, Tamir and Sharon really put together a good presentation talking about what's going to happen over the next 6 months in the industry. And really the next 6 months are going to be tough. I don't know about you. In the Austin market, my listings are going crazy. So I'm getting a lot of showings on our listings. I'm actually getting listing after listing. I'm in the process of hiring agents right now because it has gotten so busy for us. All of our buyers are doing exactly what's happening right here. Mortgage applications increased 2.8% from 1 week earlier, according to the data from the Mortgage Bankers Association weekly mortgage application survey for the week ending November 10th, 2023. We're going to throw up a slide right here. You're probably not even going to understand what it means, but I'm going to talk about it anyway. So the Market Composite Index, a measure of mortgage loan application volume, increased 2.8% on a seasonally adjusted basis from 1 week earlier. So what does that tell us? It tells us that those interest rates dropping, Jerome Powell coming out and saying, hey, we're not going to raise rates the last half of this year. We are seeing a direct correlation to interest rates dropping for that reason. And you know what? We don't need necessarily rates to be cut in order for rates to drop. So I would be going out to all my clients right now. I would make a weekly email that goes out what's happening in the market. And I would say, hey, look, if you haven't already seen that rates are down in the low sevens, there's opportunity for buy downs. Because what did we talk about on Wednesday when I was on here? We were talking about how sellers are giving up almost 50% in the Austin area are giving up concessions or giving concessions to closing. So let's get some concessions. And we're seeing more inventory hit the market. So all good news for our buyer clients. Bobby on the hot sheet's looking to buy a house right now. He needs a good agent in Long Island. So the refinance index increased 2% from the previous week and a 7% higher than the week a year ago. The seasonally adjusted index increased 3% from 1 week earlier. I mean, look, so what are you seeing in your markets? Where are we looking at in the comments? Who's seeing buyer activity spur from this, and who's using this as a way to articulate to our clients that, hey, look, it's not as bad as it looks. Maybe interest rates are going to be dropping even further. So that means it is time to buy. What are you seeing in your markets? Alyssa says, thankful for Brian and all the BAM family. I'm not necessarily BAM family, but I love hosting the hot sheet. Trey Serrano, who was on yesterday, great job. You guys make agents look good, keeping us educated and informed. Love it. Raj Sahu, one of my good guys here in the Austin, Texas, dominating with a YouTube channel, by the way, my good friend Raj. Okay, so shares of mortgage activity, the refinance share of mortgage activity also increased from 39. It's increased from 31.4 to 31.9. So it increased a little bit. So even refinances, I don't know who's refining at 7.3%. Yeah, I have seen in my market different sellers that are trying to get people off of mortgages. So they're having to refi into those higher mortgage rates. And now that mortgage rates dropped a little bit, they're doing that. The adjustable rate mortgage at ARM share of activity decreased 8.8%. I mean, because who wants an ARM? Now, ARMs are really good products. I'm on a 10-year in my house right now. So I think we're probably seeing less, maybe you tell me in your market, less available ARMs that make sense, or maybe a 3-2-1 buy down, something like that. FHA share of total applications decreased from 14.4% from 14.7%. I find that a little interesting because I know, you tell me in your market, who is taking advantage of this market? Is it people with FHA or is it people with VA? VA share applications increased 11.2 from 10.5. That's a pretty big jump. I know we have a lot of VA clients here in Texas, and they are taking advantage of rates right now, especially if you can get like 0 down. Yeah, you're going to have a higher rate, but man, you're going to save some of that cash. USDA share. If nobody knows what a USDA loan is, we have them here in Texas. It's really for those like rural areas around. So like in Austin, you're really not going to be able to use a USDA loan, but maybe Hutto, the outside of Hutto, of total applications remains unchanged at 0.5%. There's just not a lot of USDA. I know in Austin right now, we have what's called a T-Shack loan. So it's a loan that they give you 3% down. Who's taking advantage of those? So, I would get with your lender and see, hey, if any of those buyers that need a down payment assistance, that like the T-Shack loan's a great loan for that. Beth says FHA lowered insurance has helped offset rates. Beth, thank you so much for all the comments that you throw here in the side. I really appreciate that. Phone ringing, buyers back in. Yeah. And I think that we're going to see prices kind of level out at the beginning of the year. Maybe not as much in Austin, because I think we still have a lot of inventory. You tell me in your market, what do you think prices are going to do in early January? Or what are you telling your clients? Alyssa says, I have a couple buyers I'm working with who said they're recognizing the opportunity right now, and even with higher rates. Yeah. So who else is seeing that in their market? I'm curious. I know we have buyers going on contract like crazy. All the buyers that have been on the back end of our CRM that we've been pumping this out are now reaching out. Investors are reaching out to me again as well. So are you seeing investors reach out? Okay. I'm getting long-winded here. I apologize, Bobby. Average interest rates for different mortgage types. The average contract interest rate for a 30-year fixed rate on a $726,000 house. Not as much in Austin, Texas. We don't see those. We do, but I mean, the median in Austin's 540. 7.61% is the average of what you're seeing, and it was unchanged. With points decreasing 6.7 or 0.67%. The average contract interest rate for a 30-year fixed rate on a jumbo is 7.58. So, I mean, buyers are getting used to 7.5%. They're probably going, look, I'm just going to refinance in 3 years. Are your clients saying that? I'm curious. Don't forget, I want to hear from you in the comments. Are you going to call in today? Trey, I want to hear from you. Mr. Spicy, Raj, I want to hear from you. Don, I want to hear you call in. Beth, I want to hear you call in. We're going to do that in a second. The average contract interest rate on mortgage-backed FHA was 7.3. 7.36% on a 15-year was 6.94%. I feel like it doesn't make sense if you're paying 0.5% more to be at a 30-year versus 15. Everybody's different there. So what do you think about interest rates dropping? How much further do you think they need to drop in order for buyers to really get back in? I think it was the Zoller team the last time we were on here said if rates get back into the fives, people are going to quit caring about their 2 to 3% interest rate that they have in their home. They're going to jump back in. What do you see there? Let's talk about home builder sentiment. You can either pull up this, Bobby, the article, or we don't really have a good slide for this. This is a CNBC article. Home builder sentiment declined again. I remember at the beginning of the year, I was at a Highland Homes party, and Highland Homes was so excited. We're so happy. We're so happy. And I love Highland Homes. No knock on Highland Homes at all. We're so happy. We're so excited. And I mean, they were trying to sell how excited they were. But that was, at that time, the home builder sentiment was at 35%. Now it's down to 34% in November. So the home builder sentiment is the National Association of Home Builders Wells Fargo Housing Index. And so let's imagine this: if 50% is the median, right? So above 50% is good. Below 50% is not good. Home builders are at 34%. So even though they have all these incentives that they are giving their buyers or trying to incentivize you to bring in buyers. I know Lennar was offering me 5% in Austin the other day. I got a email from Lennar saying, hey, we're now giving 5%. And I wanted to puke. Just because I was just the name Lennar just made me upset because of some of the stuff they did with my clients last year. You tell me in the comment section how you feel. The decline in home builder sentiment is attributed to the rise in interest rates. Now, keep in mind this this report came out before interest rates dropped, or this. So I would imagine next month we're going to go from 34 maybe to 38%, maybe 40, back in the 40s. You tell me what you think. Pricing out a significant number of prospective buyers, increasing finance costs for home builders. Now, caution amid price cuts. Builders are resorting to price cuts. So this is what I would be telling my clients right here. Home builders are resorting to price cuts because they're at 34%. They're not feeling that good. Now, you tell me, there's a lot of builders here in the Austin area that are still pretty happy. I know Highland Homes, there's a neighborhood they're building in. I call them every week like, hey, how are you guys doing? Oh, we're doing great. We only have like 3 lots left. We're looking good. So they're not really offering as many incentives, but I would be maybe talking about and doing videos about builder incentives if you have builders in your market. The percentage of builders cutting prices increased from 32% to 36%. Video idea. Home builders have increased the amount of homes they're price cutting for 32% to 36%. Here's what that means for you. Boom. Interest rates have dropped. Here's what this means. Incentives. I would be putting out content like that in a heartbeat. In fact, I have. In fact, my video that just came out Wednesday was all about new home builders. And this is before they dropped to 34%. So in November, reaching the highest level of the current cycle, and the average price cut was 6%. So if we can get 6% off, we can get interest rates down. This is a good idea for you. In fact, we're writing offers today, Eileen is, on new construction. Components of the index. The components of the housing index saw declines in November. Current sales conditions fell by 6 points to 40 from 40. Sales expectations for the next 6 months dropped by 5 points to 39. So builders are getting a little less excited going into 2024. I don't know if rates don't go up and they keep coming down. I would be talking to my clients about that. Despite the decline in sentiment, builders express cautious optimism due to recent signs indicating a potential decrease of interest rates. The 10-year Treasury moving back to 4.5 range is seen as a positive development and could bring mortgage rates close to 7.5%. We're below that. Important inflation moderators. In fact, if we look at, Bobby, if you want to pull up, forget the rest of this thing. Let's talk about the 10-year Treasury. 10-year Treasury, as we pulled up, was slightly down, if you can pull that up, which is great. We want to see this keep coming down, or does it go back up? Oh, now it's up. Geez, I watched this thing and it's like up and down, up and down. So look, if we see this thing flat by the end of today, rates are going to be flat probably Monday, which is going to be fantastic. Going up 0.002% isn't the end of the world. Let's just hope it doesn't increase. But we saw rates yesterday. In fact, my good friend Jason Cassidy put out a really, really good video on his Instagram. It was pretty interesting. This guy pops in and he's like, "Hey, do you ever wake up hungover or whatever?" And Jason's like, "Nope." But hey, interest rates right now 7.36%. Great video. I'd be creating content like that. Robert says, "Ugh," to Lennar. All right, this is the time right now. Start calling in. Bobby, we are going to take calls. Beth's going to call. Robert's going to call. Don's going to call. Raj is going to call. I'm going to start reading through some of these comments. Beth says FHA lowered insurance has helped. My lenders have in-house portfolio loans and lower rates, 6.25 should get people back in. I agree. Don says definitely seeing 6 with no points on deals right now. That's awesome. I would be promoting that. I'd be doing a video. Hey, here's where the median is, right? 7.36. Here's where some of our lenders can get you if you, if you meet all the metrics at 6%. Here's a difference on a $500,000 home. You can go to, I use mortgagecalculator.org. I would just screenshot that or screen grab that. Here's what it's at, 7.36%. I have lenders offering 6% plus some sellers are giving concessions. So we can get you a little bit more money. I'd be creating content like that. I can't call, got to dash to a closing. Well, that's the best reason not to call, Don. I appreciate that. Don said, I tried to get them to do some concession packages and they just dropped the prices. Yeah. It's interesting. Each builder is going to be different. Stocks are steady is what Sarah says in the private chat. So stocks being steady, we'll see how that impacts the 10-year treasury as well. What's going on out there? Who are you? Where is everyone in the world? I got through that information so fast that I didn't give you all time to get ready to call in. Robert says Lennar, ugh. Yeah, I mean, I'm sure the BAM doesn't want me talking about Lennar too much on here, but I didn't have the best experience with my clients during the pandemic. So I'm just coming from experience. All right, what are you seeing in your market? What's going on in the comment section? Who's calling in? I got to hear from you. Beth says, my big issue with new construction is a buyer objective saying it's too small, which tells me the market hasn't caught up with our prices. This is a really, 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 really good point. Really, really, really good point. Because I was talking to Bobby about this before we jumped on the show. I'm talking to my wife about creating some content about what buyers are seeing in the market and why homes are sitting on the market. And we're coming up with some creative ideas. And we're talking with Bobby as well about what he's looking at in the market. I have a listing I went to last night, and the seller was like, this house was on the market for 91 days. We went under contract. It's coming back. I want to relist it. I pulled it, it expired. And I was talking with them and I go, what's interesting is you're priced what I look at right. From an agent standpoint, this is right. But let's walking through your house. It needs some upgrades here. It needs some upgrades here. It has a pool, which is fantastic. But buyers right now are so sensitive. Unless we offered them a ton of incentives, they're looking at this house going, for this price, I could move maybe a little further north and get brand new, maybe slightly smaller. This house was 3,600 square foot. Maybe I can get 3,000 square feet brand new and I don't have to do any work. So is that what you're seeing in your market? I feel like in the Austin area, homes that are sitting on the market are homes that, need a little bit of work. So some of these sellers too that bought in the height of the market don't have a lot of flexibility. So they're not going to be able to spend 30, 40 grand upgrading the house to get that extra 20 grand. So what is my YouTube? Destin to 3A with Debbie. You can just look up my name, Destin Debbie. Jeremy Knight, you can pull that up. I've got a couple YouTube channels out there now. I now have a property tour channel that I R&D'd from my good friend Raj Sahu. He does a really good channel. And I have my channel, which I talk about more of the market stats, what's happening in Austin. So just look at my name, Jeremy Knight, you'll find it. I got 3 buyers into contract last week. Phoebe.
Jeremy, we have Raj on the line.
Raj, like Yahoo Sahu. What's up, bud?
Jeremy, how's it going?
Good to hear from you. How's the weather in Austin, Texas today?
It's cloudy. Tough to do this.
Yeah. What's going on, bud?
Well, I was calling in because I thought you brought up some really good points on kind of the market and in general. And I think what I'm experiencing personally is all these sub-markets are diverging. And so a good example of what I'm seeing, I had a client contract in a community we both know well, Santa Rita Ranch. Nobody knows anything about Austin, the top selling community here. And there were 50-foot wide lots that opened up. So 13 lots opened up with a builder, and they haven't had lots available for 4 months. So I knew it was going to be competitive again. My client ended up having the contract as soon as the lots opened up right after midnight. 1 a.m. We wired in funds. 6 people bought between 12 a.m. and 3 a.m. We got an email from the builder agent at 3:30 in the morning stating, congratulations, 6 people bought after you, and 3 of those people all wanted your larger lot. Now, that was one experience in one community. There's so many other communities where builders are fighting to just get buyers out there, and they're desperate. I feel like the more desperate they get, the more alcohol they're offering realtors and doing events and stuff like that. So you're seeing all the events that are happening. And so I just think there's the diverging markets are diverging in a way where you have 2 completely different markets, some that are, communities a mile apart from.
Yeah, it's interesting because Eileen was up there yesterday. She was in looking at Santa Rita Ranch with a client, and they looked at a couple other areas around there. And you're right. There are specific neighborhoods that have all the amenities, the right property tax rate. As we know in Texas, property tax, if you have agents or if you're an agent in Texas, property taxes can be an issue. And you look different neighborhoods, if they have what a buyer wants as far as like the size house, the awesome lot, all the things, people are jumping on those properties. If they don't, people aren't. They're sitting there because there's a neighborhood not too far from there that there's 60 homes on the market between resale and new construction. And we just sold one in there actually earlier this year, Morningstar. And man, I tell you, it took 30 days to sell that property, and we had showing after showing, but we were competing with the builders.
Absolutely. And you're competing with the amenities that are in Santa Rita, now the on-site school. 2 communities. Basically, Jeremy's talking about a community that is right next door to the community that I was in that haven't lots by after midnight. So talk about the difference in 2 communities that are pretty much walking distance of each other. A big thing I'm also seeing, Jeremy, I wonder if you're seeing it in Austin, is diverging between forever homes and starter homes. So forever homes could still be doing really well in those forever home communities. Forever home in Texas is probably like over 3,200 square feet. So I'm seeing some of those still sell really well, especially when they're in a great community. But in those same communities, starter homes, like under median home price, are doing, it's awful. I mean, they have so much inventory. I just talked to a builder. They have 25 inventory homes, are all finished, ready to move in, and they're just sitting there. You seen the same thing?
Yeah, I see the same thing because there was a report out earlier this year, maybe even 2 months ago, and it's talking about home builders are trying to build more affordable homes. So in order to build more affordable homes, they're building smaller homes, more of the starter homes. So if you look, if I bet you, if you were to look at homes between 1,000 square foot and 1,800 square foot, that inventory would be far vast more than that from 1,800 to 2,500 square foot, and then there'd be even less inventory between 2,500 to 3,600 square foot. And that's because builders, it's hard, it costs builders more to build that big, especially if they're building a single story floor plan. So interesting. I'm seeing the same thing. I think that for most buyers, if I wanted to buy a starter home, like let's say 1,500 square foot for under 500 in the Austin area, I would just move closer into Austin. I wouldn't move out to Santa Rita Ranch. I wouldn't move up to, Wolf Creek or one of those markets. I would move slightly further in and maybe buy a little bit older, maybe buy 2 years older because that inventory is available. So that's what you're seeing too.
Yeah, exactly. And I think that's a good point. I think Byron touched this on a past spam in the morning where he just said the buyers that are moving right now are the ones who move. And I think for some people that I think my last 3 clients, 2 of them just had their second kid. So, I mean, you know what it's like to have a kid use space so fast in your home. And so I think those are the ones that are still moving and they're buying forever homes. I don't think anybody really has to get a starter home. And that buyer also is not as elastic as a buyer. They can't just shift their budget up $100,000 when interest rates are this high. Whereas your forever home buyer, which in Austin, that's still like in that $7,000 to $1 million range, they can still shift their budget. And there's a lot more room to budge on their budget.
Yeah, I want to ask you a question. So right now, and this is just talking about the Austin market in general, and if I want to hear from you in the comment section as well in your market if you're seeing this. So we work. Obviously, our YouTube channels are directed. Your YouTube channel and my YouTube channel are directed a little bit more towards buyers, right? So we both work with a fair amount of buyers. With your buyers that you're seeing come in on your channel and the buyers you're working with, are they more relocation buyers or are they buyers that moved here a couple of years ago that are finally ready to buy?
It's 90% relocation.
Right.
The state usually.
So, and I think that's interesting. So in your market, I'm curious, are you seeing more first time buyers that have been in your market for a long time or are you and why I'm asking this is if you're seeing that, how are you marketing to those people differently? Right. And so that would be my question there. Are you using some of the stats here? Are you not using the stats here? For Raj, his channel, which I talked about briefly earlier, it's all home tours channel. And it's a fantastic channel. It's done very well. I joked and said that it's boring because I'm a realtor. And the reality is I'm just jealous of how good his channel is and how much easier it is to create that content. Not that it's easy. It definitely takes time and effort, but as far as like having to come up with information, it's definitely easier. So Raj, shout out to you, man. Great channel.
Thanks. I appreciate it. Thanks for having me on, Jeremy.
All right. Thanks, Raj. We'll see you soon. Bobby, we have any more callers? What's going on here?
No more callers. I think everybody's getting a head start on the weekend here, Jim.
Yeah. All right. Well, thank you from me. I'm happy to be a host here and co-host for Byron. If you want me back, definitely drop my name in the comment section. If you want to get a BAM membership, I have a BAM membership. Use a code Jeremy. Again, drop in the comments. Thanks to Byron. Thanks for the team. Thanks to everybody that puts this together. I think as agents, it's really important to have a really good ecosystem around you, whether that's your brokerage, whether that's coaching, whether that's BAM and using the BAM stuff. There's so many other good podcasts that come out from BAM throughout the day. There's this guy named the Broke Agent. He does something. I wouldn't even pay attention to that guy. Just kidding. Love you, Eric. All right, there we go. Have an awesome weekend. Have a great Thanksgiving. That we are out.